Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a central bank that's just cut rates for the 7th time. This means that potentially it gives a little more wiggle room for the Federal Reserve and the Bank of England to cut rates, but maybe it doesn't. We're going to talk about what that means for us as UK mortgage holders and people that want to buy property, or even if you rent a property, it's good to know what's going on. And so in this video, I'm going to break down how much they've cut by, what the new rate is, and what the impact will be around the globe. If you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We could hit 41,000 subscribers this weekend. So if you can see around here how close we are, do subscribe. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That massively helps with the YouTube algorithm and really helps the channel grow. So thanks to everyone that does that. So, interest rates, they're high, aren't they? Or at least they are if you live in the UK. We're at 4.5%, the Bank of England base rate at the moment. And that impacts people that are on tracker mortgages. It impacts the amount of interest you get with your bank or your savings account. And it also impacts somewhat credit card debt as well. And so ideally, for savers, we want to keep the interest rates high. And for everybody else that borrows money, which is the majority of people, we want these rates to come down. Now, this week, the Federal Reserve, Jerome Powell, he's been out there saying, these tariffs aren't great. And we're maybe not going to cut rates in May. So that's hinting ahead of time. While he won't say directly what they're going to do, they will give little subtle hints. Now, in the UK, the Bank of England is expected to cut rates in May. The markets are saying there's an 86% probability of that. Now, that could change. And as we listen to the Bank of England Monetary Policy Committee doing interviews, they will do the same as the Americans did this week. If they're not going to cut rates, they will start to hint or imply that that's what they're going to do. But someone that is cutting rates is the European Central Bank, the ECB. I wish for once we were in Europe. Whether you wanted to Brexit or not, you definitely would prefer rates going down at the rate they are. And they've been cutting rates really fast since 2022. Now, this is down to the fact that two things that they've attributed this to. One is inflation in the Eurozone is at 2.2%. It's 2.6 in the UK. I can't remember exactly what it is in America. Maybe you can comment below and let me know. But yeah, it is lower. They've got their inflation very close to that 2% target. So that gives them some wiggle room. The next thing that they talked about is tariffs. The tariff war. The tariffs are a concern for the EU. Donald Trump isn't happy with the EU. He feels that the trade deficit is too large, and he wants to put tariffs on the EU. Now, the tariffs that he proposed initially were 20%. Now, that's on a 90-day pause at the moment, and they're trying to figure that stuff out. I think it's still on cars at 25%, but 20% would really hit European business. And because of that, the EU feels that they are going to have slower growth, if not go into recession. So this is a consideration in their interest rate meeting as well. So what did they cut rates to? Well, they cut the rate down by 0.25%, 0.25%, down to 2.25%, 2.25%, half of what we've got in the UK. That's a massive difference. And they're talking about stimulating the economy, getting things moving, helping businesses to get going. And that's what they're looking to do. Whereas on the UK side and on the American side, the talk is still all about getting inflation down. Now, we're expecting inflation in the UK to drive its way back up next month because we've got energy cost increases in April that you've already had. You've got your council tax, your water rates, the minimum wage has gone up. What else has gone up? National insurance contributions for businesses. Business rates have gone up. There's a lot of stuff that's gone up that is probably going to increase the cost of goods that we buy. We've also got expectations that by the end of this year, that the inflation in the UK will be 3.7%. So that gives the Bank of England a little bit more of a tricky situation here. While we think we could go into recession, which you would normally cut rates to get you out of that, we've got inflation that's sticking around, giving us stagflation, which is not great. So ECB is moving, I believe, in the right direction. And I'd like to see the Federal Reserve and the Bank of England be more bold, and rather than react late as they normally do. That's what always happens, is they react so late. They did that with increasing the interest rates. They were so slow once this inflation started to take hold. People were sitting there thinking, what is going on? Why are you not acting on this? It was talked about in all the newspapers. Why are we not acting fast enough on this? And inflation went up to 11%. Now they're doing the opposite. Inflation is starting to go down, and most of the inflation for a long, long time is not anything that it's you or I fault. We're not going out and spending extravagantly. It's service side inflation that we can't control. We can't control the petrol price. We can't control energy costs. We can't control cost of food. And so by increasing the rates or keeping them high and restrictive, you're not really helping anybody in this situation. So I feel they should be following the ECB. But let me know, what do you think should be happening right now? The ECB, they're half the interest rate that we've got. The Federal Reserve are indicating, because of the tariffs and because of the uncertainty and because they expect inflation to go up in America, they're not likely to pause in May. But the Bank of England is looking at a cut in May because there's unemployment situation as well, which they're worried about as well. It's a total mess. But what do you think? Let me know in the comments. Do you think the Bank of England is acting too slow and they should start cutting rates that little bit faster? Do comment below. Or do you think they should pause? Do you think they should wait to see what happens with the tariffs and the impact that has, and if it does push inflation even higher than the forecast of 3.7%? Always comment on the videos. And if you haven't done already, do check out the fundamentals of property investing. To celebrate 40,000 subscribers now, in the description, you can grab a copy of the fundamentals of property investing for £20. It's a one-time payment. It will teach you how to source properties, how to refurbish properties, and then how to maximize cash flow with those properties. Is it serviced accommodation you want to run it as, or an HMO? We'll talk to you about what is the best option in that course as well. Everyone else charges thousands for that sort of stuff, and it's 20 quid. So go and grab a copy while you're here. Do smash like, do subscribe. Check out all the other content as well on the channel, including this video right here.